Oh, welcome back to the channel. I hope you are doing well today and I hope you are having a fantastic day today. So if you clicked on this video, chances are that you are a first-time home buyer or a first-time investor looking to invest in a rental property, or you are a seasoned investor. What do I mean by that? You've already invested in properties and you were looking to get into more properties, and now your problem is, what is the best market? That's the question you are asking. What is the best market to buy rental properties in? So if this applies to you, be sure to watch till the very end. Or maybe you are just so curious and you like the thumbnail and the title of this video. If that applies to you as well, be sure to watch till the very end of this video. In this video, we're going to be talking about the best market, the 15 top markets, biggest metros, largest cities to buy a property in, a rental property in right now. And this is according to this report from Construction Coverage. And if you hang on till the very end, I'm going to be giving you my take, my perspective, and some key highlights that you need to be paying attention to if you are looking to buy a property in any market right now, and the parameters that you don't want to ignore if you are looking for a rental property. Okay, so if you are wondering what the background is, I do own some rental properties, and I've been investing in the rental property space since 2015. So I do have some background on this for those of you who are wondering. I'm not just a dude who is reading off an article on the internet. I have done this and I'm currently doing it. I bought and sold a few properties. So again, just to make sure we get that out of the way for those who are wondering. But before we dive in, if this is your first time stopping by this channel, be sure to click on that subscribe button right now to avoid missing out on the latest helpful and exclusive tips for your financial wellness and success. And one more thing, give this video a thumbs up to help other people find this information quicker. Thank you. So let's jump right into it. So according to this report, we do have a few methodologies that they use for the ranking. So before we get into the top 15 cities, let's quickly talk about the methodology. Basically, what parameters did they use to come up with this number? So let's quickly get there. So the very finding that we're seeing here is based off of 4 parameters. So this report used 4 major parameters to rank these markets. The very first parameter that we're going to be looking at here is the gross rental yield. So the gross rental yield, this sounds like a big number, but it simply is that taking your 1-year rent and you divide that by Zillow's home value, by the home value index, and you multiply that by 100. So this report did take the ratio of the annualized, so over a 1-year period, the median rent, so the rent in the middle, and they divided it by Zillow's home value. Now some of you may be saying, why Zillow? Yeah, Zillow is not the best place to get your home value. It gives you an insight, but you do want to get the value of a home by doing a comparative market analysis, your comps. But for the purpose of this report, they use the Zillow home value. Okay, so now the next parameter that we're seeing here is the previous 1-year change in home prices. So this article did compare how prices changed from the past year till now, so projecting it, and then they also had a projection. That's the next parameter. They projected the 1-year change in prices, so they forecasted the 1-year change in prices. Then the very last one here is something that's very important to many investors, which is the property tax burden. This impacts your cash flow. Remember, your principal, interest, taxes, and insurance are the payments that you have to make in order to keep your property, and whatever the spread is between your rent and this PITI, or pity as some people call it, is your cash flow minus other expenses and operational items that you have to factor in, like vacancies. But not to go so deep into that, right? Just wanted to quickly highlight the parameters that were used for this ranking. So let's jump right into the list. So the very first metro, or the very first market we have on the list here, is the Kansas City, Missouri and Kansas area. For those of you who are not familiar with Kansas City, so Kansas City does happen to have a state line. The city is bordered by these 2 states, the state of Kansas and Missouri, but most of the city City is on the Missouri side. So again, I'm very familiar with this market. I have invested in this market, so I'm very familiar with the Kansas City market. That's why I do have some perspective on it. But according to this report ranks the Kansas City market as number 15 on the list. And the gross rental yield, this tells you basically how much profit or how much cash flow you are going to make as an investor. I know some investors look at your cap rate. So this is almost like, I just want to say, for the sake of simplicity, let's just say this is close to your cap rate if you are an investor. I'm not going to go into what a cap rate is in this video, but you can do a quick Google search for that. Maybe for the next video, if you do want me to explain what a cap rate is, let me know in the comment section below. So right now, the 6.05%, so roughly a little bit over 6% is what you're looking at for a gross rental yield in this market. And the home prices did go up by almost 10% in the previous year, and the forecasted growth in home prices is 10.4%. so this is very good. Now when it comes to the tax burden that we're looking at is 1.17%, so not too bad compared to most places, right? And the other thing I forgot to mention, the other methodology is the unemployment rate, but this to me is a number that I don't think this is the most up-to-date number. They use the 2019 unemployment rate. We all know what happened in 2020, even though 2020 was an anomaly, but this number off of 2019 is one of the reservations that I have from this report. Okay, moving on, the next city on the list is Miami. The next metro is Miami, Fort Lauderdale, Pompano Beach, Florida. So this market does have a gross rental yield of 6.69%, which is a lot better than the Kansas City market. But the average home prices here seems to be a lot higher too, at $312,574. And the increase in home prices is not as good as the Kansas City market. We do have roughly 7% growth over the last year, and the projected growth is at 8.4%. Okay, and the property tax burden seems to be under 1%. This is good. So this one just have a ring to it. Okay, so the next stop here is number 13, and number 13 is the Virginia Beach, Norfolk, Newport News. So basically this area does have a 6.55% gross rental yield, and the average home price is here, sorry, the median home price, I keep saying average, the median home price here is about $260,000 roughly, and the projected the growth in this market is about 9.5%. That's the forecasted growth, and the average tax property burden is 0.84%. So still under 1%. To me personally, anything under 1% is pretty good, but the unemployment rate here we're not going to talk about. It seems pretty high. But I don't know what it is. This is the 2019 number. Now the next up on the list is the Orlando, Kissimmee, Sanford, Florida area, and the projected growth in this area is about 8.8%, and the median home price is roughly $268,000. So this is a lot higher again than the Kansas City market and other markets, but the gross rental yield is at 6.57%. Okay, and the tax burden is still under 1% for this one. Next up is the Pittsburgh, Pennsylvania area. So the Pittsburgh, Pennsylvania area does have a lower median home price, so you could buy homes a lot cheaper in this area. So you have $174,000, roughly $175,000 for your median home price, and the gross rental yield is not bad at 6.69%, and the projected growth the forecasted change in home price is 10.1%. so you do have some appreciation in there, and the average property tax burden is not too bad. That's at 1.48%. Now moving on, here is Phoenix, Arizona. So Phoenix, Arizona does have a slightly higher median home price at $315,000, and the gross rental yield is not as high as the other cities that we've seen so far, but the appreciation or the forecasted appreciation seems pretty high. The growth in home prices is at 14.7%, and over the past year they did see a 15.3%. So this is good, and the average property tax burden is 0.57%. Not bad again. And moving on here, we do have New Orleans, Louisiana. So New Orleans did get a 77.7 composite score according to this report. But here's the deal: the home projected home increase is not as high as the previous ones that we've seen, but it's still pretty good, right? We do have a 6.65% gross rental yield, so which is not bad. Next up here is Atlanta. So Atlanta, Sandy Springs, and Alpharetta, Georgia, and this area seems to have a median home price at around $255,000. So this is the median home price, and the gross rental yield, basically how much money are you gonna make, right? It's at 6.51%. And then the previous 1 year change in home price is 8.93%, and the forecasted growth is 10.1%. Then moving on here, we do have the Detroit, Warren, Dearborn, Michigan area. So this area does have a median home price of $195,000, and the gross rental yield slightly higher, and the average growth, so the median, the 1 year projection in home appreciation seems to be around 12.3%. So this is pretty good. The tax burden seems to be slightly higher than 1%, so 1.37%. Now moving on here, we do have the Indianapolis, Carmel, Anderson, Indiana area. Now this is an area that I've heard so many good things about, but right now we do have a slight increase, or an increase, in the median home price, which sits at $200,000 according to this report. The gross yield stands at 6.34%, and the projected 1 year growth or appreciation in prices seems to hover around the 9.8% mark, and the tax burden is way on, it's under 1%. It's at 0.88%. So next up here is the Rochester, New York area. That's number 5. And according to this report, the median home price in this area is right around $170,000, $169,500, and the gross rental yield is pretty healthy. So you have a 7.2% gross rental yield, so that's pretty good, and that's why it's number 5. And you do have a strong appreciation here, 10.5% appreciation over in the next year. The previous year, it looks like it did 9.87%, but the average property tax burden, the tax burden there is 2.56%. So if you're planning on investing in this market, you got to pay attention to the taxes, but it does look like it has some great gross rental yield according to this report. Next up is Oklahoma City, Oklahoma. So Oklahoma City, I've heard great things. I've heard really good things about this market too. Let me know your thoughts if you invest in Oklahoma City or any of these cities that we've mentioned. Let me know if this report corresponds to what you know about these markets. Now, the median home price in Oklahoma City hovers around $171,000, and the projected growth, the appreciation, it's not too great, but it's at 7.3%, which is still okay. But the gross rental yield, y'all, the gross rental yield is at 7.48%, almost 7.5%. That's not bad, okay. And the tax burden sits at 0.93%. So that's what we're seeing for Oklahoma City. Next up here, number 3, we're getting really close to number 1, is the Memphis, Tennessee, Mississippi, Arkansas area. So Memphis does have a median home price of $167,900, and the gross rental yield is 7.69%. So this is not bad, y'all, and it does have a strong room for appreciation. So the forecast right now, according to this report, the data from this report is 9.7% in appreciation for the Memphis area, and the previous year growth in Memphis area was 10.57%. Now the tax burden, not too bad again. The average property tax burden hovers around 1.01%, so right around 1%. So not too bad again. Like I said, we're not going to be paying attention to the unemployment rate because this goes with the 2019, but I guess it's factored into the ranking here. So moving on is the Tampa, St. Petersburg, Clearwater, Florida. This area, according to this report, had a $240,000 median home price, and the projected home appreciation is Whew, it's good. 12.3%. So if you are an investor looking for appreciation, this is pretty good. 12.3%. But if you track it back the previous year, you still have a strong appreciation if you bought your property here last year. So 11.43%. And the average tax burden is at 0.9%, still under 1%. So this has a gross rental yield of 6.76%. Still strong gross rental yield. And number one here is the Birmingham, Hoover, Alabama area. So if you are in this area, this report ranks it at number one. And the factor here, the big thing here, is the average property tax burden. I mean, the property tax burden is only 0.5%. 0.1%, 0.5%. That's crazy. 0.49 to be specific, according to this report. And this is based off of a median home price at $184,000, and the gross rental yield is 7.61%. Great. I mean, that's not bad. It's pretty good, and it does have a strong projection of appreciation, so increase in home prices at 9.1%. So now that you've understood what the market looks like, the best properties, you've kind of seen this list. Here's my take, right? This is all based on the numbers and the values that these surveys or these reports they do a good job, right? But they give you the great the macro view. They don't get into the weeds. This market, when it comes to real estate investing, is localized. So you have to look at your backyard. Don't just take the numbers you get on the internet. There are other things you got to look into. Even in a market like Birmingham, there are other niches, there are other areas that you have to look into. So if you are in any of these markets, or maybe your city is not listed here, it doesn't mean that your city is not doing good, or that you cannot invest in your city, or you have to pack up and move, or go move and invest in other cities. Now, if you're in a really expensive market, that makes sense. So one thing I want to point out here is these surveys or these reports are based off of the metrics that they've looked at, but there are other metrics that these reports do not look at, such as which states or cities are landlord friendly. So is this for multifamily? Is this for single family? Again, I think this report is based off of single family rentals, because I don't think this is really based off of multifamilies. But let me know your thoughts in the comment section below if you are in any of these markets. So before you leave, if you feel like you've gained some insight from this video, be sure to give this video a thumbs up to help other people find this information quicker, and do not forget to subscribe. So see you in the next video. Stay safe and keep winning. Thank you for watching.